Good morning, everybody. This is absolutely a lovely day. At least that's what I would say. Unfortunately, you can hear there's still a slight echo in my sound. I've set up my system in my new home, but it's very, very due time for a new video. And that's because this is what we are looking at today. Look at that. We've seen actually $20,800 as a current low, and that's just absolutely splendid. I mean, we finally hit some seriously low levels that people were not expecting to hit. And I mean, yeah, man, this bear market has been absolutely gruesome. As I recall, last video I said that I still have not seen any signs of strength, and that the chances of lower are still much higher than the chance of going higher. And as a matter of fact, we've dropped about 33.7% from where I said it. And so yeah, I never claim to know what's going to happen, but the game of probabilities has worked out a couple of times in my favor over the last few weeks, last few months, and I myself, I'm actually quite happy about it. Now, so what are we doing here? Well, this is the moment where you really have to start looking at significant levels for a reversal. I mean, in history, Bitcoin has never dropped below the previous bull run high, and that would be about 19,500 for this point. And if you would drop below that, you would have seriously broken market structure from Bitcoin from the last 12 years. So at some point that will happen. The question is this going to happen this market cycle, 4 years, or in the next, or the next, or the next? But at some point it will definitely happen. And we are setting up, of course, for a perfect storm nowadays. Why is that? I mean, the stock market is crashing, the DXY is moving up, the European Central Bank are being twats and are raising the interest rate by 0.25% and are now a full percent behind. What? Are they already a full percent behind? Well, the US is probably going to raise it even more. Yeah, I think we're still minus 0.5%, and the US is on 0.5%. So I think we're a full percent behind on the US, and mortgage rates are going up, and the stocks are coming crashing down insanely, and they try to fight inflation. But the thing is, you cannot fight inflation when you've pumped so much money in the market. I mean, if you print 80% of the full market supply, if you print 80% of the full market supply of money, then you would expect all prices to rise by at least 80%. I mean, that's what I would say. And of course, that's not the 100% truth, but that's like a reasonable rule of thumb. So yeah, here we are. We've already bounced a couple of percentages, and this is the daily chart. Look, we got a small uptick in volume even. I would personally expect that there won't be many sellers left, but there are. So it's crazy. And if you take the March 2020 drop all the way to here over the weekly, then you could even see some bullish divergences on the RSI, meaning the price is making a lower high and then the RSI is making a lower low. So on this chart, it's only a short chart, we're at the lowest RSI monthly ever. I mean, that's pretty baller. I mean, these are the days to get bullish. It's absolutely bonkers. I mean, you gotta love it. This is why you take profit. This is why you have dry powder. This is the moment where you start buying in spot and then start building up your positions and dollar cost averaging even more. And the only moment when you want to get into leverage positions as a trader is if you know where you're looking at. I remember this one, this channel here. I remember telling you that when we were here in the middle of no man's land, and when we had some levels above us, that this might not be the best moment to take a trade, but since we have seen no sign of strength, that if we would break below this trend channel, that I would expect much lower. And man, it's been, yeah, we've been absolutely spot on with this prediction as well. I mean, that's pretty bonkers, you know. Just yeah, every time people on Twitter or Discord or wherever tell you that that drawing these lines is bullshit, they just don't understand, man. They're like flat Earth people. They're like, I don't understand gravity, so it must be fake. so because I don't understand something, it means it's not true. I mean, yeah. I just yeah. So past all the talking around, I wanted to include some new things this week to discuss. And we've talked about the point of control. That's the highest monthly traded volume. And the point of control from all the way of the January 1st, 2021 till here is actually at around $37,500. And here we have a high volume node at 57. Here we have a high volume node at 39. And you could call this a reasonably high volume node at 35. And yeah, below that there's not much volume. I mean, we can draw this back for a while to see, but you'll see that the point of control will be all the way here. 9,500. So between where we are and this volume node, there's not much traded volume. Usually these inefficiencies get cleared up by Bitcoin, but considering the rule of thumb of the last 12 years that we never break below the previous high, you would expect that, yeah, this weekly, this volume node is a very significant one. If you fall below this one, then man, we truly are going to Goblin Town, you would expect. On the other hand, falling below this one might very well be a fake out. So what I'm doing now is I'm going to look at levels where we would expect a reversal. So we're going to keep remembering this like $19,200 level as a point. It's a weekly, it's a high volume node, and it's a little bit below us. Now I wanted to move to ExoChart. And this is called a footprint chart of monthly data. So all these candlesticks are months, and if you think away all these lines, the gray lines, and you look at all these charts, I mean the green and the red, they are actually the monthly candles if I would draw this on monthly. So these candlesticks represent these candlesticks, and the gray is the volume traded. So what you can do with these candles is you can make a volume profile or a volume profile of every month that we've traded. And every month that you've traded, there is a point on where the highest volume was traded, and these yellow lines or these orange lines are called naked points of control. Naked means they are untapped. So here at 48,700, we have had the monthly point of control of this month, December 2021, and it's not been tapped yet. As you can see in the past, these naked points of controls of the monthly, weekly and daily are usually very, very well respected. So a first significant level on the upside would be 48,700. Well, that looks like miles away, over a 2x from here. But that's a point of control that's acting as a magnet whenever we will be in a bearish phase again. Below us, we have some very interesting point of controls. The first one here is at 19,150. So that's already another one nearing the 19,200. Below that, we have a naked point of control, a monthly naked point of control of 15,350, and then all the way at Goblin Town at 11,350 and below. So I would always look at these level to level. 50,300, I'm not gonna talk about that one and lower, because to me they feel very far away. Of course, I would like this template to be removed from the video. Here, it's a bit of a different chart, but it's only colored differently. And here we have another weekly naked point of control at around 18,750. So these are levels I would mark out here on my Excel chart. I will actually do that right now. I will draw a line. I'll make it a monthly coordinates text monthly naked point of control. So we're getting some confluence here at this level. So if we reach it, I don't know, but this level to me seems like significant support. That's a level I'm looking at it above us, and yeah, you can see all the levels above us. So around 19,200 below us, that would actually be below the previous all-time high. So if we close a daily candle below that, then I would say we have seen no signs of strength, and lower is still more probable than higher. If you do start to bounce, we would have formed a new range between where we were, I would say like the 29,000, and where we are now. That's the value area low from this whole range of last year, including this year, and where we are now. So if I would draw that out for you, it would be looking like this. Oh, excuse me. It's early morning here. It's 6:55, and I'm not fully awake yet. Look, this is the one I was looking. So depending we bounce here, I would say like this or like this. But somewhere here, I would say we will be forming a range, and if we do get to this level, somewhere here, and that's a new sideways channel we'll be forming. Man, the chart is too busy for my eyes in the morning. But this is of course a gamble, and this is the last thing I wanted to discuss today. What we have here is a nice extended flat. This is flat, and what you see here is that we've made it to an extended flat. Oh, these lines are very ugly, but basically we have a low, a high, a higher high, and a lower low. So that's like a megaphone pattern, extended flat. That's how this is looking. That's how you call this formation of a chart. Yeah, I really want to keep it like this. I feel like I've been rambling a lot. I might have, because it's like I said, still it's early in the morning. My thoughts aren't that sharp, but I have to get to work in less than half an hour. And I really wanted to make a video update for you, and I really wanted to express that this is not the time to be fearful. Yes, if you are heavily invested, it sucks to look everything go down like this. But these are the opportunities. I mean, remember the market crash here of the corona virus. I'm not even sure if we can say this word. But if you'd have bought in this fear level, where we crashed all the way down, look at all the upside potential. And now again, I mean, we've gone down so much. This is not the levels to be scared and to be selling. Yeah, of course, over 70%. Of course, if you need cash to buy your groceries, to pay your rent, then you're fucked. But then you've made the mistake much sooner than where we are here. You've made the mistake here or here or here or here or here by not selling. Well, I would not recommend it selling it at 40k back then, but only if you really needed to. But not right here. I mean, not right here in the lower parts of the chart. This is not the place to sell anymore. This is the place to start buying, start dollar cost averaging. And so far, chances of going lower are still higher than the chances of getting higher. But at some point, a relentless drop like this would suspect a bounce. So personally, I'm building up spot positions of Bitcoin. I'm building up spot position of ETH. I'm building up spot position of Link, Phantom. These are the four I'm buying heavily. They're blue chips. To me, they're relatively safe. They don't look like projects that are going to collapse. And these are my bets for the near future. And of course, I'm going to look at more, probably Rune, probably Quant, just to diversify a bit. I've taken have big profits on my OSR position already because that one made some nice volatility. I bought at 0.5 in a bit or 0.4 high and I sold at above 1. And I closed the rest of my position when we came back down below the 0.8, 0.008. So that was a nice short little trade. So that's what my plan is. Dollar cost averaging into spot. And I really, before I take some bigger positions on Bitcoin longs, I really want to see a sign of strength. Hold significant levels, bounce off it, and then I'll get in. And yes, that means this time that I will not be able to pick up Bitcoin in the lowest of lows. But again, as a trader, preserving your capital is more important than making new profits. And as an investor, dollar cost average on the way down, dollar cost average on the way up, until you start dollar cost averaging out on the way up. And so far we are only going down, so every time you buy in with a fixed amount of money, you're buying more coins at this point, which is what I would call in the supermarket a very nice discount. And with that, I'm just going to call it a day. Enough rambling. Sit tight, hold tight, buckle up, and be safe. Alright, if you like these kinds of videos, please like and subscribe, and we'll see you over at Blockchain Champions.